revealed a decline in the business activity in manufacturing, while the world's top economies are facing the threat of a slowdown under the pressure of high rates. Tensions in the Middle East risk flaring up with a renewed vigor. Considering that the yen and the Swiss franc strengthened against the US dollar last night, market participants expressed the risk-off mood due to the geopolitics. Notably, all three of these currencies are safe haven assets. Remarkably, one of the reasons for concerns is the US itself. After yesterday's publication of fresh statistics, is becoming increasingly clear that the US economy is losing momentum. For example, the US manufacturing PMI by the Institute for Supply Management dropped to its lowest level in July since November last year, though analysts had projected growth to 48.8 points. The index fell to 46.8. Let us remind you that an index value below 50 points indicates a decline in the business activity. Hence, weak economic data is fueling fears of a recession in the US. In turn, the forecast for rate cuts by the Fed Reserve are revised in terms of the timeline and the overall size. For example, according to the FEDWATCH tool, after yesterday's disappointing reports, 27.5% of traders now believe that the US Fed will cut the funds rate by half of a percentage point at once. Just yesterday, this probability was 2 times lower and amounted to 13.5. A new serious test rates the American economy today as non-farm payrolls for July will be published, including data on wages. The US dollar advanced across the boat at night. Now its index is drifting lower within the intraday corridor of 104.17 and 104.40. Markets are braced for a drop in the government report on the US employment. So far, the appeal of the greenback as a safe haven is losing out of the yield of dollar-denominated assets. If the non-farm payrolls end up in the red, the US dollar will fall even lower. The US benchmark stock indexes have already responded to weak economic data with the sell-offs and closed yesterday with losses. At the same time, the trading day was marked by high volatility. For example, the Nasdaq initially gained about 1%, but ended the session down 2.3%. The S&P 500 tumbled by 1.4% yesterday. Today, the index opened lower, consolidating in a narrow range of 5,410 to 5,566. The euro-dollar pair opened on Friday under the influence of several contradictory factors at once, which balanced each other. For example, the single currency should have responded by falling to rising unemployment in the Eurozone. However, it was not as strong as the estimated 6.9% increase. So the jobless rate reached the March levels. Such a deviation between forecast and reality became an increasing incentive. Besides, yesterday, the Bank of England lowered its key interest rate and thereby strengthened the US dollar. You are aware that the US dollar index basket includes the euro, pound, yen, Swiss franc, Canadian dollar, and Swedish krona. In particular, the share of the pound is 11.9%. For comparison, the yen and franc combined account for 17.2%. The advantage was on the side of those two currencies, so the US dollar retreated. Today, the euro received an additional bonus for growth, namely a report on industrial production for France. Industrial output also did not live up to the forecast. Instead of 1% increase, the indicator reached rose 0.8% from a month ago. However, considering that the previous figure was minus 2.2%, the rise is still impressive. Yesterday, the euro-dollar pair was going to continue its downward correction due to the strengthening of the US dollar. However, today the market changed its mind. As a result, the euro challenged the resistance of 1.08 and managed to climb within the intraday corridor of 1.0785 to 1.0827. Besides, local oversold conditions have already been mirrored in the single currency, and the euro's downward cycle could have been interrupted for this reason. It's clear that the main driver of the currency market today is the information environment. First of all, the US non-farm payrolls for July. Thus, technical analysis in trading the euro-dollar pair is given only a secondary role. Analysts expect some weakening of the US dollar. Thus, the single currency will have a real chance to end the week on the rise, and the nearest resistance is seen around 1.0850. Meanwhile, oil prices are trading lower within the overall uptrend, and today Brent futures have again fallen below $80 per barrel. Moreover, from the point of a technical analysis, a stable price below this critical level allows the possibility of a new bearish round. And we should bear in mind that the Brent crude is a reserve. Apart from the US dollar weakness, oil is also sensitive to economic and political factors as well. The Brent price is rising moderately today after a sharp decline the day before caused by weak US manufacturing PMIs. At the same time, political risks are escalating again, which is a bullish catalyst for the oil prices. The US has not officially recognized the election results in Venezuela, and this country is currently one of the largest oil exporters. Now, the market is braced for the stepping up the sanctions regime, which will influence the energy market. Thus, oil prices may well rise to $82. Bitcoin is getting absolutely crushed for falling below the level of $65,000 despite the inevitable rate cut in the US, which is a positive factor for the cryptocurrency. Perhaps the reason for the fall of Bitcoin was large transactions carried out by defunct Japanese exchange MT-Gox, which transferred almost 34,000 bitcoins worth $2.3 billion to new addresses. Transactions of such an extent certainly affect cryptocurrencies. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel. See you on Monday.